thank you very much for everyone who's joined us. So as we are now a couple of minutes past the start time, I'll kick off. So hello and welcome to everyone who's joined us for Quantuma's weekly webinar, our 11th. And if you haven't had a chance to see all of them, then they appear on our website. And if you get a chance another time and would like to catch up on what we've said on previous occasions, please do look us up. I'm Mark Sands, a partner in our insolvency team here at Quantuma, and I'm delighted to be your chair for today. Hopefully, we're all seeing signs that the country is slowly but surely easing out of lockdown. The cricket has returned, and with the cricket returning, the rain has come and an England collapse. It's almost like life is returning to normal. So we're continuing our series of webinars, sharing our insights into what we're seeing in the current market. It's a fast-moving, changing market, as I said, with return to normality starting to come about. So during today's webinar, our experts will review our concerns and challenges being faced by the businesses we're advising around the UK. We're a national practice, and the presenters provide a cross-section of our team, but we're a national practice, and we will be discussing what we're seeing from the north to the south of the country. The Q&A function is open on this webinar, so please do try and come up with questions as we go along. We've had a couple of questions submitted beforehand, so I'll make sure that those are tackled at the end. The plan is that we'll have the chat for about 40 minutes, leaving some time at the end to tackle the questions. So do please use the function to get some questions into myself and the team. And indeed, if you do it live, this is a very much an interactive type of session. Where possible, where appropriate, one of the team will pick up the question and deal with it as we go along. So if it's on point at the time, do chip it in there and we'll try and build it into the discussion. Do bear with us if we have any technical difficulties. We hope not to. This is our 11th webinar, so I think by now we should have got used to it, but you never know. If Wi-Fi gets interrupted and I freeze, one of the other team will carry on regardless. So bear with us if there's any hiccups, but as I said, we hope not. And indeed, if the fire alarm goes off, then that's almost certainly in your house, not ours. So turning then to the team, I'd like to introduce two of my colleagues, fellow partners in our firm. First of all, Maxine. Max is a partner in our restructuring and insolvency team based in the south. I often see Max when I visit our Brighton and Eastbourne offices. Her expertise includes corporate restructuring and solvent liquidations. Max also works in informal and formal restructures, with also in cases involving asset tracing, litigation, investigations of fraudulent activity, and certainly on the latter, I wonder when we come out of this and see the debts needing to be repaid, whether we'll see more of that to be looked into. Max's sector experience includes care homes, hospitality and leisure, and retail and charities. So that's Max. So we also have with us Rehan, one of our partners in the north, based in our Bradford office. I actually spent some time before lockdown with Rehan in Leeds, seeing our clients and contacts up there. Rehan's also often seen in our other northern and Midland offices. So Rehan provides advice to distressed companies on their options, both formal and informal, looking at both turnaround and recovery. His sector experiences include manufacturing, construction, hospitality and leisure, as well as retail. And myself, I head up our personal insolvency team, which won't be a main area of our topic today, but I mention it because we run our personal insolvency team as a national practice. And so I deal with clients from the north and the south. And as I mentioned, I've been out with Rehan in Leeds, I've been to see our team in Birmingham, as well as being in London on a regular basis. So I see actually the different regions, and I'm pleased that, as I said, as a firm, we have national coverage. So let's move on to the discussion. So we're going to talk about the different industry and sectors and the different regions, and look at what are the differences between the north and the south. Max, do you want to start off?
Yeah, thank you very much, Mark. I think one of the differences between the north and the south, according to Rehan, is that northerners are quite tight, which being from North Wales, I can agree. I mean, ultimately, no one prepares for a pandemic. Some businesses may have had reserves allowed for in their forecasting if they're seasonal businesses, but generally nobody expected 4 months of closure. Obviously, there was news today of gyms and swimming pools reopening, which is great news. But planning to have no income for that length of time, I think has been a massive impact on everybody. And there's definitely been some industries that have benefited and they've done far better during the pandemic. So Amazon, Netflix, Zoom, which obviously we're using today, TikTok, I can say I've never used, but supermarkets, Deliveroo, Uber Eats, pharmaceuticals, manufacturers of PPE equipment, and obviously the hand gels and the sanitizers, the prices went through the roof. And interestingly, following the lockdown announcement, the weekly growth rate for home and leisure retail went up by 200% compared in previous years. So unless you fell into the category of essential supply, we all know what that meant, you were told to close your business. And so when looking at the North and South divide with Rehan and comparing what we're seeing in the marketplace, reviewing some of the statistics, we looked at a survey that had been run by Simply Business, which should pop up on the screen now, thank you, which it looked at a number of SMEs across the country, and their results reported that the average cost of the pandemic to SMEs was around 11,000, finding that London was the hardest hit, with the average cost being 17,000, followed by 15,000 for Scotland and the North East, and the figure drops to 10,000 in the southwest of England. London saw the highest permanent closures of businesses at 7%, Northwest was 6%, Scotland 5%, and dropping to as low as 2% in the southwest of England. Interestingly though, on the reverse, the South was the most confident in the business returning to normal. 80% said that they thought that business would return to normal across the South, and Scotland and the North East were around about 75%, with London having 70% of confidence. And the map obviously shows the details there. I mean, Rehan, do you want to pick up your thoughts on viewing the stats?
Yeah, absolutely. The interesting figures there is the fact that there's if you look at the northeast figures, like 15,000 cost to the businesses compared to 17 in London, and various different across the country. Now, given what supposedly the north-south divide, I would have expected that the impact to businesses being a lot different in numbers, and the percentages of businesses stopped trading, I would have thought been a lot different as well, given that a lot of people seem to think that more work gets done in London than anywhere else. So it's refreshing, I suppose, in one way, given I'm a northerner and, as Max says, potentially a Tigate. It's good to see that there's not much of a differentiation in the impact, whether it's north or south. And that got us talking, actually. Is it a north-south divide, or is it a sector-specific divide? Max has already mentioned that a lot of the tech businesses and medical industries and anyone who's sort of supplying into supermarkets saw a spike in the first couple of weeks of lockdown. Now, if you're in that business, great, but if it seems to be that it's sector-specific, as opposed to not a north-south divide. So that's something that was interesting. Now, if you look at some of the cases that we've been dealing with now, then if you can go to the next slide, it shows that this shows that the different impact on the different sectors over the COVID period, and you'll see that it's not a north-south issue. That wherever you are in the country, all these industries are relevant and are available in the different in the different regions. So it is something that is more, I think, sector specific than north-south divide. And as we said, as everyone knows, the virus isn't discriminatory. So it doesn't matter whether you're in the motor industry or education or food. It's going to impact your business. So that's definitely sort of what we've been finding, and having spoken to our partners in different regions, we're not seeing a particular sector in let's say Leeds, Bradford, or in Birmingham, or in London that's being impacted massively, and we're seeing a surge in that industry in London, for example. It's different things coming through the table. So if you look at, I mean, I'll give you some of the examples, some of the cases that I'm seeing in the north. If you change the slide, about a couple of stuff that I've been dealing up here. If you see again, I've been dealing with a manufacturing business up here in fact Dewsbury, so near Leeds, Bradford area, where it ran out of, but pretty much closed as lockdown occurred, and we had to look at various different options available for them, including critical payments schedules and cash flow forecasting and stuff like that, as well as I've been dealing with a travel aid, not travel agency, booking agency, and a airport transport company. So if you look at the different sectors, that's where we'll find industries that are being impacted. Now, compare that to what we're seeing down south. Max, I suppose you're going to say that you're going to see similar sort of stuff.
Yeah, exactly that. Definitely similar types of businesses as to what you've referenced already. So one of the cases that I was involved in was the windows and doors manufacturer, where they'd obviously closed, ceased trading. While they were in downtime, they were having a look at the business, and they'd applied for their CBILS loan. Quickly realised though that the cash was going to run out pretty fast, and that the staff that they had quite a large workforce. They didn't actually need all of the individuals in the business that they had, and so the issue they were faced with was that redundancy was going to be the thing that toppled them, as opposed to anything else. And in that instance, we actually referred them to the Redundancy Payment Service. So they offer a scheme whereby if a business is unable to obtain further funding, and it is the redundancy that's the issue for them, the Redundancy Payment Service will advance the money required to the employees directly, and the business basically reaches an arrangement with the RPS as to how long it will take for them to repay the money back. And as long as there's a business plan and a decent cash flow forecast, the RPS will take it into consideration. And it's not something that many business owners are aware of, but it can be a big decision between actually carrying on trading and coming out the other side versus the other option, which we see quite frequently, is a business liquidating to deal with redundancy. So there is that additional lifeline there that I don't think the government has publicised very much. Obviously, restaurant trade has been impacted massively. Thanks to Rishi and his Eat Out to Help Out scheme, I think we might see things improve. But one of the restaurants I was dealing with had been trading for 16 years. It was a very niche offering, based in a theatre district. All of its trades pretty much was reliant on theatre goers and tourism. And what they found was that they were tied into a long lease, which was costing them quite a lot of money. Again, property in the south tends to be quite expensive, but because they were such a small venue with a niche offering, they weren't going to be able to adhere to a 2 metre or 1 metre plus guideline from the government. So in that scenario, the director took the decision that actually to carry on fighting a good fight, so to speak, he would rather just shut the doors and get the staff to be paid their redundancy pay in lieu of notice from the government. And so we ended up dealing with that in liquidation. And the final example is a manufacturing company, which it's ongoing. It's in the south. They deal with manufacturing and transporting goods globally. And of course, with the impact on trade and the very niche area that they sit in, the market has been severely impacted. Their income has dropped dramatically. Added to which they have a very complex ownership structure. Majority of the workforce is on furlough, and in that instance, we're looking at actually how we can assist them outside of a formal process to keep the business going forward. But again, in that scenario, very expensive ground rents that they're having to deal with, which is also impacting massively the cash flow. Not all landlords and not all freeholders are quite as forgiving as some of the others out there, perhaps.
I think one of the things that you've mentioned on the two examples is the potential issue with a lot of businesses is the potential rent. Now, I think one of the things that I've been speaking to a number of clients on is the difference in the rents across the country. And if we are going to have a north-south divide, I think that's the only real differentiator that I could find, which is causing people to either fall over or look at options. And if you do look at a few cases, if you move on to the next slide, there are a few cases that I'm actually dealing with right now or involved with where the only real issue or the only real difference between these three scenarios that you can see is the rent. Now, these three are all restaurants or food type businesses across the country. Two are in the south and two are actually central London, and one's up in Bradford near us in the office. Now, the options essentially are one we're looking at trying to do a rent negotiation with them. So if you look at the first one on the left, they've pretty much been closed since lockdown, and they've decided that, look, even after lockdown, given where we are in a lot of business type districts, both of their units are in business or districts. They've looked at, thought, well, the footfall is going to fall. We're not going to be able to sort of sustain the business going forward. However, there's some value in the lease, and there's large deposits paid. So potentially, as the only thing we can potentially do is try save or get some money back into the pot for creditors, and potentially find a buyer if we can for the leases. So that's workable because of the fact that it's a large deposit and it's in an interesting area which people might want to buy a lease. Whether it's £1 or whether it's £100,000, there could be someone who might be interested in that, and that's why we're looking at it, because of the value of the rent that they're getting. The other one is, again, it's a profit. It's potentially a profitable business, but for the fact that the rent in the current climate makes it totally unaffordable and unprofitable. So we're looking at doing a cash flow forecast. We've already done the cash flow forecast and looked at different scenarios of what the different rents potentials could be, and we're kind of pitching to the landlord that if you go for a turnover based rent, they've got a chance of surviving. If any other scenario, it's not going to work. So we're looking at that with the view of saying, look, if that doesn't happen, we might have to go down the CVA or another more sort of terminal option. So we're discussing with the landlord at the moment on that one. And the third one is actually a northern one, which is almost identical to the middle option, the middle case where they've closed for the summer period, for the COVID period. However, the big difference in that one is the rent on the northern unit is significantly lower than what they're paying in London. So rather than going down a rent negotiation and a potential CVA or a liquidation, it's more cost effective for them to be shut over the COVID period, because of the fact that the government grants are pretty much covering the little bits of costs that they have to undertake during the 3 or 4 months that have been closed, and the furlough scheme is pretty much covering the staff. So from their perspective, it's been, well, we might as well stay shut because it's not costing us anything, and we're not making any losses. So from that perspective, it's been the difference. The only real difference between north and south, in my opinion, is the rents at the moment.
I pick on two interesting points you bring up there. City centres. We've obviously seen city centres empty during the lockdown. Do you think that the different cities that we all work in will see any difference, or is it having the same impact? Leeds, London, Brighton? And secondly, you mentioned about the different cost structures. Of course, the amount coming from government in terms of grants didn't vary across the regions. So any thoughts on different city centres and whether the grants mean that I think what you are saying with the tea room is the grant actually gave a lot more support there than to someone with higher overheads.
Yeah, I mean, if you look at the cities question, I think it is relevant because if you look at where a lot of the financial hubs are, so Leeds, Manchester, Birmingham, and central London, a lot of people they're all service-based businesses, and they're all, a lot of the businesses like we are, we're all working from home. And if in the last week or so, if we go out on a meeting, we're going out to a meeting and coming back to our office at home. So a lot of the businesses that are linked or rely on business due to offices and professionals coming in, whether it's lunchtime or coffee meetings and all that kind of stuff, they're all good. The city centres of those financial hubs are going to feel the impact. So I think we are seeing a difference in the different types of cities that we have. So I'll give an example. If you look at locally, we've got Leeds and Bradford, which are like 4 or 5 miles apart. Now Leeds has a lot of professional services in there. I was in Leeds 2 days ago. It was quite dead, not much happening there. I went to Bradford yesterday. There is lawyers and accountants and professionals in there, but Bradford city centre was a bit more bubbling than Leeds. Now, I think that's because the professional services are working from home, and that is going to have a knock-on effect in those particular cities. So I think it goes in a weird kind of, the north side divide isn't there, but if you then go into the micro economies within the different regions, you'll see a different impact in those particular cities. So I don't know if there's any sort of southern cities or towns where they're very similar.
Yeah, I mean, I would completely agree with what you're saying, where you've got the financial kind of city centres where, for example, London, obviously, where our London office is still closed at the moment, as I'm sure are most other offices. Most people commute into those areas, and so the cafes and restaurants and everything that have reopened won't be seeing the same upturn, in my opinion, as the likes of Brighton or, you know, Cardiff as well, because people tend to live in the areas that they work. I think the further south that you go, and with everybody, as you say, working from home, I think Brighton very much is its own little micro economy. I was in Brighton the other week, and it was definitely busier than it had been during lockdown. But I mean, I haven't been into London. I would assume it's almost a bit of a ghost town at the moment. So yeah, I would say that there is definitely the contrast between the north and the south, as in both have their own kind of little micro economies as well. I think for the south coast, a lot of our a lot of our businesses tends to be the tourist industry, and I think a lot of those may have fared better because they've had to budget and plan for seasonal types of trade. I'm involved in a group of hotels that we were trading a few months ago, that are all based in the kind of Cornwall, Devon region. One in Blackpool, which is definitely shut, and a couple on the Isle of Wight. And so the impact to those where the trade hasn't really kind of picked back up, that they have now stayed permanently closed, the ones that we were dealing with. But a lot of it is reliant on the tourist sector, and so it's great to see that people are building in confidence and starting to travel, and perhaps looking at the UK as their holiday destination, because there's a lot of businesses down here that depend on that.
But to talk about tourist stuff, I'm guessing like Cornwall and Blackpool to a certain degree, they're pretty much relying on one industry or one sector, and all the other businesses around that rely on that one particular sector. So I'm guessing if that main thing that does is gone, then that will not going to affect in that particular, as we say, microeconomy.
Well, we were talking about airports, weren't we? And, you know, one of the businesses that we kind of had a light touch approach with was a business that provided car parking for or near airports, and they had 3 sites, and all of which obviously closed pretty much overnight. And again, it was rents down south, so definitely rent issues with the landlord, which they were able to renegotiate and, you know, live to see another day, as it were. But the ripple effect that comes from the travel industry and the tourist industry is I don't think anybody was prepared for that. I know, Rehan, we talked about, you know, laundrettes that you've been advising, and my response was, well, I would assume that most people have gone out and brought a washing machine now, but of course their business isn't just reliant on households, is it?
I mean, that laundrette business, they've got 35 stores across the country, and initially I said exactly the same thing. Well, surely you're relying mainly on people walking in. And he goes, well, not really, because a lot of my business is based on catering, on the catering industry. So all the weddings and the hotels and all the bed covers and the sheets and entertainment stuff that comes in. And people, if they're going out to weddings and horse racing, and where they've got dresses to dry clean and suits to dry clean, that's not there. So 80% of our turnover is based on contracts and existing work from suppliers. The footfall is just 20% of our business. So it's the particular sectors that have been affected, and with, you know, apart that the ripple effect locally to us in Dewsbury. Dewsbury is predominantly a bedding manufacturing hotspot for Europe. So most mattresses around Europe are made in Dewsbury, believe it or not. So and all the shops are shut. You couldn't get any new mattresses. So they were pretty much the whole town was closed, and that's always going to have a knock-on effect on everything else that comes with within Dewsbury Batley area. So if the sectors are shut, like the airports, if they're shut, then it's going to have a knock-on effect on the other businesses that that are reliant on that particular sector. So if you look at some of the bigger factories across the country, I think there's Nissan in Sunderland. Now they've only just started making cars a couple of weeks ago. Now I'm guessing in the north east, that would have had a massive impact in that sector, and in fact that might explain why Sunderland's one of the lowest impacted, lowest R number in the country, because they're not working at the moment, or they weren't working until recently, which that's a knock-on effect, might explain why others are having impact in the R numbers, because people are not working.
I think the topic was north versus south. Is what we're really coming to is it's sector driven, and sectors can in some sectors be very specific, especially in manufacturing and such, or head offices can be very specific to towns.
Yeah, I mean, ironically, not ironically, but I think in Yorkshire, 15% of the economy is reliant on manufacturing. And that is, I mean, historically Yorkshire has been known as a textile industry in Yorkshire and Lancashire actually. So we still do 15% of our business is textile, but that not textile manufacturing. But now that also includes food manufacturing, packaging, and all that kind of stuff. So there will be a lot more factories around, a lot more sort of production businesses around here, which you need to be close by. You need to be next to or within a closer distance than what we can in offices. We can be in our offices and still produce our work, whereas in a factory type environment, you probably do need to be a lot closer, which might impact on the chances of there being a second wave, or might impact on potential having a second lockdown, which will have a knock-on effect on businesses. I mean, just like we've seen in Leicester at the moment, that could be, I'm not saying that is a reason, but that could be one of the reasons why it's happening there. And if you look at other cities where there are numbers growing up, there seems to be a lot more manufacturing happening in those sectors.
I mean, I've just seen a question from Sean Taylor asking, are we finding PE firms are sitting on cash and are starting to get keen on buying up the companies, or these companies? What about financing? Is access to finance okay? I would definitely say that this is a market for opportunists. and people that do have access to cash, cash is king, then there are opportunities to purchase and invest in these types of things. Certainly with the hotels that we're dealing with, which are quite complex structures in themselves, we found of late that we've had more interested parties externally who have got cash that they want to invest and try and make a return on. So I don't know if that fully answers your question. Sure.
But the one thing they need to bear in mind is these the PPE companies and others like the businesses that have surged over the lockdown period, like the gardening businesses and stuff like that. Now they're going to have a surge, but they're going to come back down to a normal run rate, if not a low run rate, because I think you said the other day, once you've done your garden and made your extension, you don't need another garden, another extension. So people, those businesses need to then consider and plan ahead, saying, right, we had a great March, April, May, but next year ain't going to be the same. So let's plan ahead and reserve cash. So people need to plan ahead rather than think, wicked, we've got all this cash, let's do something about it.
Yeah, I mean, it's interesting. It's like hairdressers, obviously you don't quite need it, Rehan, but you know, I know quite a few local hairdressers in the lockdown period have promoted some of their staff because then they have a higher charge rate when you go in to visit them. And again, it's that concept of, well, once you've cut somebody's hair and they haven't had it cut for 4 months, then you're back to your kind of 6 week or however long your intervals are. You can't double book them in to try and recoup some of the cash. So I think it was quite savvy planning on their part to look at doing that. I think one other sector that's been impacted, and certainly where we are in Brighton and Eastbourne, the East Coast, there's quite a large professional services sector. And what they've noticed is that the litigation lawyers have been quieter in property terms, with obviously commercial. Residential, I expect that they'll be getting busier in the coming months. They have found an increase in the family solicitor team, where people are perhaps deciding that maybe they don't want to spend 4 more months locked in with their other halves. And of course, the entertainment sector has been hugely impacted. And again, I think when you look at the north-south divide, and is there a north-south divide? Ultimately, when the directives were given that you had to close your business, it didn't matter whether you were in the north or the south. Scotland and Wales obviously are slightly different. But everybody was forced to close, and like Rehan was saying, I guess unless you have those micro economies where, I know Rehan, you said that in Redcar they're all dependent on one particular outlet there, the impact on that economy itself can be quite devastating. But as regards the big question of, is there a north-south divide when it comes to the pandemic and businesses dealing with it, I still don't really see that there is one. And you know, planning, it has to be about, you know, planning for the future and looking at the sectors, and those that have done well need to plan about the tax element of doing well. And you know, I know of a butcher's that was turning over on 3 sites 200 grand a week, and rapidly went up to 600 grand. And you know, again, that business isn't going to come back, but if they're reporting a profit in their accounts, then they need to account for that with their tax. And with the business grants, as you say, it's interesting, Mark, that there wasn't a geographical kind of apportionment for the grants. It was one figure, depending on kind of rateable values and sector. I know one business who returned the grant money that they received because it tipped them over into a taxable income that they didn't want. So the council were quite surprised when they got a phone call saying, how do I return this? Because they weren't set up for it. You know, but £5,000 in the north definitely goes a lot further than it does in the south, and 50,000 in the same.
Well, that's the thing, because like I was speaking to a hairdresser locally, just because he's my dad's neighbour actually, and he was like, well, I got a £10,000 grant, but my profit for the year is about 10 to 12 grand. So he's got all his profits for the year already. So he's living the dream, I think, at the moment. So the grants in different regions are going to be either eaten up quite quickly because of the rents and I suppose the hourly rates that they're paying. So it does make a massive difference. And talking about the loans and stuff, so there's the C bills and the B bills. Well, there's been loads of people that have taken out the bounce back loans, probably because it's self-certain, you can write whatever you want, but there's been loads taking it out. Now in the north, 50 grand goes a long way, and in some regions we could buy a house for less than 50 grand in certain areas of the north and the northeast. So yes, that hasn't been reflected regionally, but yes, northern people probably benefit significantly more in terms of pound, value for money on the pound, because of their spend and the lower rents and the lower mortgages. However, that said, the cost of food and the cost of white goods, I'm guessing it is pretty much constant across the country. And the only real differentiator, going back to the same thing, the only real differentiator is rents and mortgages.
Thinking about just come back to raising funds, partly building on Sean's question earlier. If there's going to be, let's hope there's not a second wave, but either a local, so think about, for example, Leicester, they've had to go back into lockdown. Now, no one knows where that might happen next. What can the clients we do prepare for that sort of localized second wave? Large corporates are hoarding cash. You've said that some people are getting enough from what they need, but actually that varies tremendously from business to business. So what can our clients do to prepare for maybe, say, for example, let's take a scenario of a 3-week localized lockdown at some point in the next 3 months?
I think the answer to the question is, what would we have done if we knew that the pandemic was coming? You know, we would have stored cash. We would have looked at ways of reducing overheads and increasing profit. We would have probably entered negotiations or discussions with creditors and tried to buy time or spread debt over a longer period of time. I think there's quite a few business owners who I know have applied for CBILS, and Rehan's the same, where they've kept it for a rainy day. You know, they don't need to pay anything for 12 months. So why not just keep it and see what happens? Keep it in a separate savings account, I would say, because, you know, the pipe has to be paid eventually. Just quickly, sorry, Sean's replied just to say, just wondering if the owners with restructuring should be encouraged to carry on if they could get financing. I guess the question there, Sean, is actually the business that they're trading, is it a viable business to carry on going forward? And so for the most part, obviously we would say yes, you know, carry on trading if you are able to, but there needs to be that review to make sure that actually it is a business that can carry on. So yeah.
You mentioned then about taking out CBILS and other loans and so on, and the varying degrees to which people, what they do with the money, I suppose is what you were saying. Matthew Taylor's asked whether we see any difference across the regions in how SMEs are being supported by lenders, either through the government lending or otherwise. But so, do we see any difference in the regions about the accessibility to the finance?
I don't think so, because generally these are national funders, and their criteria is going to be the same, depending on, irrelevant of where they are. So I'm not seeing any difference in the different funds and the banks that I'm speaking to, because they're all doing the same sort of criteria and checks, make sure that businesses are viable, can sustain it. Cash flow projections are pretty much out the window at the moment because we don't know what's going on. So I don't see any difference in funders whether you're north or south based. So that's definitely not something I'm seeing any difference in.
Yeah, I would say the same. I think the funders initially just kind of struggled to catch up, and that didn't depend on on the region. It was just how quickly things were moving, and how quick people could get their product to market. But definitely, I wouldn't say I've seen an impact, depending on whether you were based in the north or the south. I think going back to your question, Mark, about kind of what do people do, and how do they prepare perhaps for a second spike, and looking at Leicester and their local lockdown, I think it's that sense that actually people just need to be alive to the fact that not every consumer is going to have the confidence at the moment to want to go out and to purchase goods, particularly if you are a not an online business. I guess, you know, when the pubs reopened, it wasn't quite the stampede that everybody thought it was going to be, although there have definitely been 3 pubs in the south that have had to close due to coronavirus picking up in that area. But it's definitely an interesting thing. I was in on another webinar a few weeks ago that we hosted, and we ran a live poll and asked the attendees there, you know, how long they think it's going to take to return back to normal. There was one person who thought that it would take 1 to 3 months, but for the most part, the majority seemed to be around 37% saying 6 to 12 months, and 49% said that they think it's going to take over 12 months. You know, you look at the fact that businesses are being allowed to reopen, but there are heavy risk assessments that they need to go through, and safety measures to make sure that people can do what they need to do safely. So the same as the gyms which are opening, obviously they need to keep their 2-meter distance, and a lot of the stuff needs to be outdoors. So I think the cost of actually adapting your business to meet these new measures is also something that needs to be borne in mind as well.
Yeah, I think the classic, I think you mentioned it, the classic saying of cash is king is very, very relevant right now. I think the fact that we've been through lockdown phase 1 or part 1, we know what to expect and we know how to deal with it. So I think if we do have a local lockdown or an even a national lockdown, people will know how to deal with the next time it happens. So people need to have in mind that they should plan ahead and sort of plan for, if there is a lockdown, can we sustain this business for the next 3-6 months, however long if there is another lockdown. Because I know Rishi's saying that the furlough schemes are going to start closing down by October. Now, we don't know if they're going to have another furlough scheme again. Firstly, I don't know if the economy can afford another furlough scheme, but
No, I think we can.
I can't see him saying, right, okay, everyone, we're going to give you 100% of employee costs for another 3 months. I don't think it's going to happen. So people need to plan, saying, right, okay, if we are in lockdown, can we afford this? So it might well be a case of, and I don't want to cross sell, it might be a case of speaking to your accountant, speak to an insolvency practitioner and reviewing, can you afford a lockdown again, and what does lockdown look like without funding from the government? So I think that's what people will be looking at.
The good old-fashioned contingency planning, hopefully with increased resilience from what businesses have been through over the first lockdown.
I know I'm saying people should, again, and I don't want Max to refer to my tight-gittedness, but the fact that we should retain money probably goes against what Rishi wants us to do and spend. But I think people should be considering holding money, some reserves where possible.
I think we're probably talking about business people. He's probably talking about consumers, but both apply to the economy side.
Yeah. That's what I was just going to say, is those that have got, you know, mortgage holidays, and Mark, you're probably better placed to speak on that, but those with mortgage holidays and credit card holidays that they've got, they're going to have to kick back in at some point. Normality has to resume in some way, shape or form.
Just in case any speakers think Max is referring to me personally, she refers to my practice of looking after individuals, which will be a different topic another day. But yes, certainly what the common theme there is that the loans rather than state subsidy grants need to be repaid, and that has been alluded to during this chat. It applies to individuals as well as companies. The loans have got to be repaid at some point. I know the surveys suggest that may not come to pass, but we are, again, I think, come to issues there, and I think you've covered that there. Please do, anyone listening still, please do add into the chat. I've got one question to cover off between the two of you. I think you've sort of covered it in part, but this recent, let's call it a mini budget. I know that wasn't quite how Rishi mentioned it. Max, you've talked about the eating out point. What do we think for our clients was missing from Rishi's mini budget? What would you have done if you could have leant over and written an extra point in there?
I think I would have extended the VAT rate change across all sectors. I think it's not just the hospitality industry that have been impacted by this. It's every profession, every sector has. And every business has been impacted in some way, shape, or form by the pandemic. And I think that I would have applied that across the board, and perhaps this £1,000 bonus for having still staff that are furloughed in the business at the end of January could have been recouped and put towards the VAT element, because I can't see many business owners who, if they've already, if the staff members are already on an average earning of £520 a week, a month, whether there's the cost benefit to them actually retaining them to then get the £1,000. I think if a business is struggling, it's not going to hang on to get that £1,000 per employee, in my opinion.
Yeah, I would have said the same thing. The VAT should have been gone across the different sectors, because I spoke to one of my contacts who owns quite a large wedding hall in Bradford, and all his weddings for the whole summer have been cancelled. Even the ones that are scheduled in August, September have been put back to 2021. So their income is gone for the whole year, and that's their peak season. So he was saying that January, February, March, our summer period covers the dead time of January, February, March. Now the step peak is gone, and the dead time's coming. So the wedding sector, again, going back to our classic ripple effect, that wedding business probably has a knock-on effect to the guys who provide the flowers, the car hires, the wedding dresses. All those businesses will be impacted by that sector. So I think it should have, his allowances, should I say, for the hospitality should have gone further to other sectors like weddings, tourism, etc. So I think there should have been a bit more thought gone into other sectors.
And manufacturing as well, I think definitely would have been an industry that would have benefited from it as well. I think it's great news for people that are buying property, though. The residential, with the stamp duty land tax being removed up to 500,000, I think that's a great move. I think certainly the professional services sector that's involved in the residential property market, I hope we'll see an upturn in people looking to move. I do think that's great news. But yeah, I think there's definitely some tweaks. It's heavily biased towards the hospitality sector, in my opinion, which, obviously we advise in the hospitality sector, so it's great news for them. But for everyone else that's kind of also felt the pain, they could have done with something being put their way. And interestingly, Eat Out to Help Out is only applicable if you go into a restaurant. So people who are concerned about not wanting to perhaps go out, or are still shielding even, they won't get that benefit if they try and do a takeaway. But interestingly, on the news this morning, I saw quite a few people who'd come up with different ways of going to different restaurants to get the best deal that they can. Yeah.
Mentioned a restaurant the other day, yesterday, so that would be interesting. But I think one of the things that we haven't really talked about is, and someone mentioned to me yesterday, is whether apart from the north-south divide, are we seeing any difference in inquiries or insolvencies with the ethnic minorities businesses? And the short answer is no. Businesses are businesses, regardless of whether they're from an Asian background businesses or white companies, white-owned businesses. So we're not seeing any difference because they're also struggling. They also have to provide food and have professional services and weddings and all that kind of stuff. So the ethnic minority stuff, I don't think is a massive differentiator either within the business world.
Yeah. Dave, go on, sorry.
Talk about what generally that the COVID seems to impact more in the different communities and different ethnic minorities and stuff like that, which in the only connection you can probably make there is the fact that if it is, and if it is having an impact in the increased R rate in the ethnic minority communities, it could potentially mean that those localized areas could be in lockdown, and then it will have an impact on businesses in those areas. So that's the only real connection you can probably make with the ethnic minority businesses. But generally businesses, whether they are Asian, black, white, they'll all have the same issues. So I don't think there's an ethnic minority differentiator either, just to add to our north-south divide issue.
Yeah. So David's just popped up a question. From our experience, has the suspension of wrongful trading liability had any impact on directors' willingness to carry on their business in circumstances where they might otherwise have decided to cease, and where your advice may have been different for them to do so? So interesting, I was advising, they deal in car repairs as we were coming into lockdown, and my advice to the director at that time was that they could be in breach of wrongful trading, and then obviously once the legislation changed, the advice changes, and it has to, because actually he was keeping his business going because he didn't know what the impact would be coming out of lockdown. And so I think that has to have a bearing when we're advising directors, and I think that they are grateful, and clearly it's open to abuse, as all these things are. You know, we know of businesses that have taken grants and used them to buy things for their own personal use as opposed to invest in their business. But for the most part, the business owners that I'm speaking to certainly have welcomed the fact that that's less pressure for them. You know, that ultimately they still need to know that the business has got a chance of succeeding, but just not having that risk of personal liability hanging over them has been well received.
Yeah, I agree. A lot of owners, directors have sort of looked at the wrongful trading issue and thought, actually, it is worth carrying on because that liability or that risk isn't there. So it's definitely helped in businesses thinking, you know what, let's go ahead with it. But I always say to people, but there are other actions a liquidator can take. So I do have other things in my armory that I can look at, and the loans thing, for example, if people are taking loans out and buying things that are not business related or spending it on not business related stuff to help the recovery of the business, then if they go into any sort of insolvency, we are going to look at it. We are going to find it, and we're going to see it in your bank statement. So it's not as simple as, oh, I've got 50 grand, let's go put a deposit down for a Lamborghini. I'm going to find it is basically the answer. So use that loan for the
yeah.
I must say, one of the positives, and this is no disrespect to lenders who normally take personal guarantees, of course they should do in appropriate circumstances. One of the positives of coming out from the bounce back loans was that there is no personal guarantee from the directors, which surely gives an element of comfort that if they're all taking a risk to try and get out the other side. And I think that was a good move.
No, that's the right move, but that opened up a massive potential for abuse because there's no personal guarantee. So people are thinking, well, what have I got to lose? I've got 50,000 usually sitting here.
There'll always be those that abuse the process, and the same with the furlough fraud, where you know companies have had staff working whilst also claiming the furlough for them. You know, and it will catch up eventually.
So someone got arrested yesterday for furlough fraud, by the way.
Yes.
Oh.
Yes.
And was that in the north or the south?
In the Midlands.
Oh no.
So someone did get arrested for furlough fraud yesterday. So it suggests that not the police, but the government are looking at these issues. And I think there was a task force or potential plans for a task force to be set up for the bounce back loans. and the CBILS loans. So yes, and I've said this for weeks, that people, it might sound great that we're getting what they term free money, but people are going to look into it and how it's being spent and what's happened to it.
We're nearly at the end of our time. Before I make some closing remarks, Rehan, Max, any final thoughts? We started by debating, is this a north-south divide? What's your closing thoughts on what you're seeing in your regions and what it means for our clients?
I don't think that it is a north-south divide when it comes to the pandemic and the impact it's had on business, in my opinion, other than the rents, which Rehan's touched on. I think it's industry and sector specific.
Rehan?
I think there's no north-south divide. It's sector specific, and if anything, it'll be microeconomies that are impacted more so, depending on their sector and what they have within that region.
So perhaps we should have called it the postcode lottery. In closing, could one of my colleagues pull up the slide that's got the asset register point, because that was one of the questions was about that. So here we go. We have launched on a previous one of these webinars our interested parties database. One of the questions was around private equity investors, other investors, and Max talked about the opportunities that will be coming along. So please do get in touch, look on our website, get in touch with your usual quantum of contact about what we're doing to help match people up at a time when there are great opportunities for the right people, right opportunities. So apologies for that. So thank you very much indeed for everyone who's joined us. That is our end of our time together for today. We hope you found it useful, and do please get in touch with us with any questions or thoughts, follow up on this debate, or indeed on anything else relating to what we do together. There will be a further webinar next Friday. The details of that will be available later today. Hopefully you're on our mailing list, but if not, let us know, get added, and do please then join that. And as I mentioned earlier, previous webinars are on our website. And so if you found today's useful, do pop into the website and have a look at any that you may have missed. So really just leaves me to thank Max and Rehan for taking their time to share experiences. Thank you very much indeed for attending. Thanks to those who asked questions and contributed towards the debate. And I'm sure we'll see you all soon. In the meantime, have a great day, a great weekend. The sun's going to come out, and stay safe. Bye-bye.
Bye.